It's Wednesday the 18th of June, this is Bullhorn Daily, and here's what's going on in the world of money, markets, and maybe missile strikes. Yes, today we've got central banks sitting still, investors pacing nervously, and the usual geopolitical melodrama playing out like it's sweeps week. Let's dive in. The US Federal Reserve held interest rates steady again today, fourth time in a row. So, no change in borrowing costs for now, but don't get too comfy. The central bank released its latest batch of economic forecasts, indicating the infamous dot plot, which is basically a collection of anonymous rate predictions from Fed officials that looks a bit like a very boring constellation. The takeaway is that they're now expecting just 2 rate cuts in 2025. That's down from earlier hopes of more, and they're being cagey about cuts in 2026 and beyond. Why? Well, inflation's still sticky, and the Fed is spooked by uncertainty over Trump's proposed tariffs and what that might do to prices. Fed Chair Jerome Powell, calm as always, said they're basically in wait-and-see mode. They want to see how prices respond to the threat of new trade barriers before they start easing rates. His actual words: the cost of tariffs has to be paid. Translation: brace yourselves. And just to keep things spicy, Powell also said their confidence in any forecast right now is, quote, not high. Wall Street responded to all this mehness by stalling out. The Dow slipped 0.1%, the S&P 500 was basically flat, and the Nasdaq squeaked out a 0.1% gain. Earlier in the day, all three were up about 0.6%, but then traders remembered the world's on fire. Specifically, the Middle East situation has investors jittery. Trump, when asked point-blank if the US is about to bomb Iran, responded, "I may do it, I may not do it," which is not exactly reassuring. Iran, for its part, says it'll strike back if the US crosses a red line. It's reportedly already prepped missiles aimed at US bases. So yeah, that's the kind of thing that tends to dampen investor enthusiasm. Oil prices moved accordingly. Brent crude held just above $76 a barrel, and West Texas Intermediate hovered just under $75. Both of those are very near 5-month highs. UK inflation came in almost unchanged at 3.4% in May, down a tick from 3.5% in April. That matched forecasts, but the devil is in the details. Food prices surged 4.4% year-on-year. That's the fastest since early 2023, while furniture and household goods also climbed. Meanwhile, core inflation, which strips out food and energy, dipped slightly to 3.5%. Services inflation dropped too, which sounds nice, until you remember 4.7% is still way above the Bank of England's 2% target. The bottom line is that inflation is cooling, but very, very slowly. And with the Bank of England's next rate decision due tomorrow, this data all but killed hopes of another cut this week. Having already cut twice this year, most economists think they'll hold steady this time. Adding to the gloom, the Confederation of British Industry, that's the UK's top business lobby group, just downgraded its 2025 growth forecast to 1.2% from 1.6%. Why? Rising costs, trade uncertainty, and new rules raising the cost of employment. They're still optimistic for 2026 though, predicting a recovery as interest rates, hopefully, drop to around 3.5%. Meanwhile, UK house prices are settling down after a frantic start to the year. Growth cooled to 3.5% in April, down from 7% in March, and rents still climbing. The average rent in England is now 1,394 Great British pounds sterling per month. Lovely. The FTSE 100 inched up 0.11%, while the FTSE 250 rose 0.25%, helped along by a few standout names. Rathbones jumped 5.5% after Bank of America gave it a shiny new buy rating, saying it's highly undervalued. Me Group, the vending machine and photo booth company that probably operates something in the corner of your local Asda store, soared 9% after confirming it's exploring a potential sale. Gambling gargantuan Entain also climbed 1.6% as Deutsche Bank raised its price target thanks to stronger guidance for its US betting business, BetMGM. Airlines bounced back too. IAG, that's British Airways' parent company, was up 2.2%. Wizz Air rose 1.8%, and EasyJet edged up 0.3%. On the flip side, Tullow Oil tanked more than 20% after merger talks reportedly collapsed, and PZ Cussons, they make imperial leather soap, dropped 6.6% after a disappointing profit update and a pullout from a Nigerian joint venture. The Pan-European Stoxx 600 ended down 0.3%, its lowest close since the 9th of May. Markets in Milan and Madrid managed late-session gains, but the overall mood on the continent was still soggy. The main worry was Israel and Iran still launching airstrikes at each other. And Trump, well, being Trump, he's calling for Iran's unconditional surrender and claims the US now has total control of the skies over Iran. That's not subtle at all. Investors are understandably spooked about how deep the US might get pulled into this mess. Asian markets mirrored the West overnight, some up, some down, and a whole lot of stress. Japan's Nikkei rose nearly 1%, led by tech stocks like Nintendo and Laser Tech. South Korea's Kospi outperformed, up over 1%, with huge gains in the tech and energy sectors. Mainland China was flat, Hong Kong fell over 1%, and Australia edged down 0.1% as miners like Fortescue got hit hard. Oil stayed elevated in Asian hours, the dollar softened slightly, and traders continued to hedge their bets ahead of the later Fed announcement. Japan's exports fell 1.7% in May, the biggest drop since last September, while imports plunged 7.7%. That's not great when your economy already shrank last quarter. In Singapore, growth expectations for 2025 got slashed to 1.7%, down from 2.6%, with manufacturing now expected to contract for the year. But the official government forecast, for now, still stands at a cautious 0 to 2% growth. So between sticky inflation, sky-high rents, geopolitical tension, and Trump's next surprise press conference, whenever that may be, central banks are now playing defense. Nobody wants to act too soon or too late. And so, like the rest of us, they're watching, waiting, and hoping the summer brings more clarity and less chaos. But hope isn't exactly a monetary policy. And that's it for today's Bullhorn Daily, your quick, clear, and maybe slightly sarcastic rundown of the global financial circus. Make sure to follow or subscribe on YouTube or wherever you get your podcasts. And remember, understanding markets doesn't have to be boring, it just has to be Bullhorn. I promise I didn't write that. We'll catch you tomorrow.